Welcome to the video version of the Wagner Daily for March 28th, 2019. My name is Rick Petticelli, and once a week we put out a video to replace the written commentary portion of our report. And hopefully these videos can help out new traders who are looking for a way to set up their charts and how they view charts. As usual, we're going to go through broad market averages, then open positions, and finally potential setups on the horizon. So first up is the Nasdaq Composite, which held on to the 20-day EMA once again on Wednesday, but did so on a pickup in volume with a lower close, generating a bearish distribution day. Now, the Nasdaq just feels like it's vulnerable to further selling in the short term. I mean, it could certainly hold on Thursday and push higher towards the end of the week, and maybe even attempt to push higher on Monday. But sooner or later, it sure looks like the Nasdaq could sell off into the 50 and 200 AMA here. The rising 50 is in blue, and the 200 is the orange line here. So it's in the 7,400 to 7,500 area, and that's what we're seeing on the weekly chart. As the Nasdaq closed at the lows of the week last week with a bearish reversal candle, suggesting that the chart may need a few weeks of sideways action to digest the strong run up over the past few months. Back to the daily chart, and here's the S&P 500 ETF SPY, sort of similar to the Nasdaq Composite in that if it breaks down below 20, it has support of the 50 and 200 AMA, which is basically less than 1.5% below Wednesday's low. And if we were to check on the weekly chart here, we also see a bearish reversal last week, which suggests that the price will need to chop around for a few weeks. All right, so on to IWM, the Russell 2000, and with the Russell, it's underperformed the S&P and Nasdaq the past few weeks, so it's already looking like it's trying to bottom out here, and it could go a little bit lower, but it looks as though it's trying to round out and maybe form the bottom of a cup here, and eventually maybe turn up on this right side. And let's see if we can go to a cleaner chart here to show the price action. So maybe something like this. Maybe it goes a little bit lower. And then in this range here, it'll start to make higher lows along this side right here and push its way back up to the prior high, maybe a few weeks down the road. And on the weekly chart, much like the S&P and Nasdaq where it had that ugly week a few weeks back, the Nasdaq and the S&P both recovered to new highs after that week. IWM did not, which makes sense because this sort of week after a strong run-up suggests sideways to lower price action over the next few weeks, and that's exactly what we've seen from IWM. So it's looking pretty good right here, and it's still a pretty shallow pullback considering the strong rally. As we look at the Fibbo retracements here, it's just shy of a 38% Fibbo retrace, which so far this is like an ideal rally and pullback situation here. Still looking pretty good. So we're just looking for the price action to eventually set higher lows on the daily chart. MDY is almost the same thing as IWM, and we see here it's given up less than 38% of the last move up. So it's just digesting the strong advance in Q1, which is all we want to see from healthy price action. Okay, let's switch from broad market averages to stocks here. Current open positions in the newsletter, we have Cyber with 75% of our original positions still on from the entry around 80. We're up 43%. Our stop is beneath 108 here, beneath the 20 EMA and uptrend line and this reversal candle on 325. ZS, we already sold, I believe, 60% of the position. So the remaining 40%, we're going to use the 20-day EMA, a break of the 20-day EMA as our stop. RNG, which just triggered a week ago over this reversal candle here, has failed to follow through, and that's not a big surprise given how weak broad market conditions have been the past few days. Obviously, there's clear support here at 104 or 103.50. So if that level breaks, we'll likely be stopped out. And SC, we're long from Tuesday's trigger over Monday's high. A break of that day's low would take us out of half the position, and the stop on the remaining half is below the 20-day EMA minus some wiggle room. And our last open long, well, we have two more. We have Mid-K, which we bought on a pullback here to the 50-day MA and 20-day MA, really the 10, 20, and the 50. We bought the move off support here at 1113 on 318 around 1140 or so. And the price action did run about 15% higher in less than 2 weeks. But with the market selling off, was hit pretty hard the past 2 days on higher volume. We still like Mid-K overall, as the current 2-day pullback is possibly the product of the market being weak. So if it can hold above the 20-day EMA, we'll look on a closing basis, we'll look to remain long. And last up is Avalar, which we bought closer to this 53.90 area. Not much fall through the past few weeks. Very little volume here as it moved higher. There was a slight pickup in volume on the move down. Our stop is beneath the 20-day EMA and the lows of the past few days. If it's triggered, we'll be out with a pretty small loss. In terms of actionable new setups, we don't have many. Really none for tomorrow. There are no new setups for Thursday's session. We're just laying low and managing current open positions. Certainly there are some charts that are holding up better than others, but there are also some stocks that are falling apart. A few falling apart are DXCM, pretty nasty sell-off, IRTC. So we've seen some selling in bullish charts, but some charts are holding up pretty nice as well. EHTH cleared the resistance around 61, but with conditions weakening, it's pulled back into the 50 here. This price action is fine as long as it continues to chop around above the 50 MA. Right now, nothing much to do other than just monitor the price action. ETSY, pretty strong gap up here on volume. Trying to hold the 20-day EMA, it may fail, and it may touch the 50-day EMA, which if it does, should hold to remain healthy, but obviously not something that's actionable for us right now, but over the next few weeks could be in play. And this is the weekly chart here. We can see any pullback would be into the 10-week moving average. So volume is also drying up here the past few weeks as it pulls back in, which is a bullish sign. So again, not something that's actionable this week, not something that's actionable tomorrow or even the next week. It might be 2 to 3 weeks down the road, but looking pretty good. SPSC, which is consolidating above the rising 10-week MA after a pretty strong move through 100 here. Let's switch to the daily chart. We see this false breakout on 321, a shakeout below the 20-day EMA, and a recovery back above. Over the 2-day high could be a spot to put in a starter position, very small size, with a stop beneath the 3-day low here around 3.5 to 4%. But if you don't want to get in early here, you could always wait for a break of the downtrend line and then a move through this prior swing high here at 110, maybe get in around 111 on a pickup in volume. Overall, I see over the past week or two, new trades have not gone as well as they have the past few months, which is to be expected because broad market averages have stalled out. So the strong wind that has been at the backs of swing traders for the past few months isn't there. So it's time to pull back in terms of trade frequency and reduce size, and maybe just sit tight for a few days and see how the rest of the week shakes out. All right, well, that's a wrap for this week's video. Thank you for joining us. We'll see you in the chat room tomorrow if you're a subscriber. If not, then we'll see you next week with another video. Have a great week and good luck trading.